Good day, gentlemen, ladies and gentlemen. I've just been asked to do a quick recording for you on the short-term scalping strategy that we use when trading. You have swing trades, which you may have heard of, which they're slightly longer term. In other words, you might be in for a full day or 2 days, sometimes slightly longer, with maybe 50, 60, 70 pip stop losses, maybe 100 plus pip TPs. That's all fine, great, nothing wrong with that. However, in choppy markets, you can often have choppy movements where it goes in a certain direction that you require, turns around and comes back, and often can stop you out. So the idea behind this is we've worked out, evolved, which has had a fair degree of success. You're never going to get 100%, where you do get a shorter term one where you're aiming for, shall we say, 25, 30, maybe a little bit more depending on the situation, but around about the 25, 30 pip scenario with around about the 25 odd plus minus, not exactly pip stop loss, shorter term trades, often called scalping. And that's what we've come to talk about today. Now, I will get to the point straight away because it does take quite a bit of data up for posting. So I'm going to show you, as you can probably see on the charts, the different lines on there. These are the moving averages, and I'm going to now start pointing them out to you. Okay, just one moment to make sure I've got the colors right. Ignore that turquoise and fawn kind of color. Ignore that for the time being. Right, at the top there, I just make absolutely sure the color, I can change color there. Okay, right. There we have there, you can see where my crosshair is, that's the brown. I'd like to take notice, that brown is a 200 SMA, simple moving average. The black one is a 100 simple moving average, and the dark blue one is a 50 simple moving average, and they're all on close. So when you put them in, you go to insert indicators. Remember, I'm using the TDM charts. If you want to know more about that, you can let me know. My number is 061-529-3431. Go then to moving average. And when you're setting it up, you go to parameters, you put the period in, whether it's 50, 100, 200, whatever, simple in this case, or close. You can see in this case, you put the color, as you can see there, and thicken the line. I've think one, two, three, number three. There we are. So you can see it clearly enough. And then OK it. Do that for the 50. That's got a 60. I know. I don't care. Change it around if you like. A 50, 100, 100 and 200. I use dark blue for this one. And then the 100 would be black and the 200 would be brown, like mentioned. When you have that, each time you put down OK it. When you've done that, I'm going to show you the top red one here. This is on the 15-minute chart, remember? The top red one here. You leave 50 in there, but you change the simple to exponential, and you change the close to high. 50 exponential high. You can use your own counts you like. You might as well use mine to start with. You change them later on if you like. And then you go to red. There should be red. There, that's crimson. Red's there. There we are. Red. Make sure it's thicker. OK it. Once you OK it, you go back 50, leave it the same. Exponential, leave it the same. But you change the high to low. Same color, red. It's the only one you're going to change the low. Otherwise, all the same, OK it. That's the 50 high, 50 low. Then you go to the fast moving average, which is the 5. That one is also exponential, but you change the low to the close, and you change that. I've used the lawn green. I think it's this one here, spring green, lawn green. There we are, lawn green, and then you OK it. Once you've done that, just make that a bit clearer. Once you've done that, you'll have the 5, the 50 low, the 50 close, the 50 high, the 100 and the 200 all on your chart. Once you've done that, you find a blank piece of your chart, right click, go to templates, and then you go to the top there, click on Save Template, and you put in a name of your choice there and save it. Choice there and save it. So if you do lose your charts for some reason, all you do is you right click, go to templates, and you can see I've saved a heck of a lot in there. You just go to the charts you save, the ones you like, and have for different strategies. A lot of people have different strategies, different situations, and then you can just quickly go to say ones and click on that, and you're back in business. Okay, I hope that now makes sense. And remember, we use this on the 15-minute chart. Now, I use on the longer term charts the 200, the 100, and the 50 on all charts. But the 5 and the 50 ones I only use on the short term. So what I mean by that, I'm going to right click, go to my properties. That's not going to work, so I have to do another one. Okay, what you do when you're doing the shorter term ones, you go again to your moving average, and this is only for the 5 and the 50s. The rest you leave on there. The 5 and the 50s. That's the short term. I'll explain how it works in a minute. 5 and the 2 high and low 50s. Then you go from the parameters to visualization, and you see what it says ticked hours. You make sure the minutes are ticked, the hours, daily, weekly. You untick them. You click on there on all our time frames, and you untick them and make sure only the minutes are ticked. So you won't have, let's say, if I go to the daily, I won't have the 5 on there. Well, I do because I haven't unticked them now, but that's my problem, not yours, because I have a slightly different setup, but because I'm doing it a bit before. But you'll find if you do it on that basis, you'll only have those particular parameters. That is the 5 and the 250s there, the high and the low 50s on your 59 minutes or below. The 1 hour, the 4, you'll have the normal 50, 100, and 200 ones, which you will need for trading. Just bear that in mind. Hope that's all clear. Now, how does it work? Right. You first of all have to have the economic calendar. Several companies do it. I use the what you call it. I've forgotten the name of it now. What you call it? Investing.com one. Excuse me. Investing.com one. And I filter it because I only want the 2 and 3 star on places like USA, China, Germany, Europe, Japan, maybe South Africa for your own sake, but don't really affect world markets, Switzerland, things like that. I'm not really interested with all due respect what happens in Brazil or Argentina or Uruguay or Colombia or Burkina Faso, because nothing wrong with the country. It's not a personal insult, far from it. It's just the fact that they don't really affect world markets. But the USA is by far the biggest impact on markets. You need to be following that. So when you go for the trade, you need to check economic calendar. There's no specific major economic fundamental data release coming out just before you're entering a trade on that specific currency pair. Otherwise, it could affect in any direction. And it's a good idea to check your longer term, your 4, your dailies, etc., to check out the trend. It's probably advisable to go with the trend. So if you checked it out, there's no fundamental economic fundamental to affect you. The trend is, let's say, in this case, down, as you can see. Let's say the US dollar JPY we got on the screen there is down. You want to be selling when the fast moving average, was the green, passes the low, as you can see here. When that passed the low here, you'd be entering, and then you'd have your stop 5 pips above the high moving average. So you want to be going low because the trend is down. You can see the trend is down. So you check the trend is down. You don't want to be buying. If you cross the above, that's a pullback. Don't go with it unless the trend changes to upwards, you go then upward. In other words, you be buying. If the trend is down, you go and sell. So if you get a scenario where it tells you to buy, you ignore it, and only when it's selling, it's a downtrend, and vice versa, an uptrend. Okay, so in this case, see a downtrend, and the green 5-moving average passed across there. As it passes there, round about this level here, you enter. You put your stop 5 pips above the guy here, which is the top red, 5 pips above there, and then you'd ride it down. If you got one micro in, there's not much you can do about that. But if you've got up, let's say 5 or even 10 micros, 0.01's a micro, zero point 0.1's a mini, and 1 point is a standard lot. If you, let's just for round figure example, say you've got one mini or 10 micros in there, as it's coming off towards your TP, you might have a TP down here somewhere. But I know now it's getting there because I can see it. I didn't know at the time. You might, as you're starting to get into profit, maybe 10, 12, just where you got to think a little bit. There's no exact science on this. Maybe start cutting your position. If you got 10, maybe, banking 3 or 4. And then as you go further down, bank a few more. And then as it's coming even further down, you could maybe bank most of them. Let's say you've got 2 left to run, and you can modify your stop from the negative where it originally was into a positive situation. So by doing that, now you've already banked, let's say, by the time, let's say your TP is here and you're there at the moment. By the time you got here, you probably banked about 8 of them. The 2 are still in there, and you got your stop maybe. Keep it about 15 pips, 20 pips, well, I don't know, something like that. Make sure you got the stop, a little bit of gap. We don't want to get knocked out in the noise. And you moved your stop maybe there for argument's sake. And if it does come back and stop you out, well, you still made that profit. And if it doesn't and it hits the TP, well, you got a 2 further pips to bank. Sorry, 2 further volume at 0.02 still to bank. Okay, micros to bank, that is. Hope that makes sense. For more details on it and the things like the dollar index, the euro index, the yield of 10-year note, the heat maps we use, economic calendars, and more in-depth discussions of strategies where we look for trades, etc., strongly suggest you can join our trading room. Even if you can't make it every day, it's on every day, 10 o'clock and 1 o'clock. And we have 2 other sessions per month, which is for the non-farm payroll session in the afternoon and the US CPI, very important market movers. We have 2 extra sessions for that there in the later afternoon. Try and make 1 or 2 of them if you can, but the more you make, the better. So we discuss it more in depth. But I hope that's given you some idea of the specific strategy that we use. Thanks very much.